Welcome. Today, we're diving into the world of high-yield savings accounts. If you've ever wondered how to make your money work harder for you without taking big risks, this video is for you. We'll break down what a high-yield savings account is, how it differs from a regular savings account, and whether it's a smart choice for your financial goals. By the end, you'll have a clear understanding of the benefits, potential drawbacks, and practical tips to maximize your savings. Let's get started by defining exactly what a high-yield savings account is and why so many people are talking about them lately. A high-yield savings account is a type of savings account that offers a much higher interest rate compared to traditional savings accounts. These accounts are typically offered by online banks or credit unions, which can afford to pay more interest because they have lower overhead costs. The main appeal is simple. Your money grows faster thanks to the higher annual percentage yield, or APY. Unlike investing in stocks or bonds, your principal is safe and insured up to certain limits. But how does this really work in practice? Let's explore the mechanics behind these accounts. Interest is the key reason people choose high-yield savings accounts. The interest rate, often expressed as APY, determines how much your savings will grow over time. With a high-yield account, you might see rates that are 10 to 20 times higher than those at traditional banks. For example, if a regular savings account offers 0.05% APY, a high-yield account could offer 1% or more. This difference can add up, especially as your balance grows. The interest is usually compounded daily or monthly, meaning you earn interest on both your initial deposit and the interest that accumulates. Let's compare traditional savings accounts with high-yield savings accounts. Traditional accounts, often found at brick-and-mortar banks, offer convenience but usually come with very low interest rates. High-yield accounts, on the other hand, are mostly online and focus on maximizing your returns. While both are insured by the FDIC or NCUA, the difference in interest can be dramatic. For example, $10,000 in a traditional account might earn just $5 a year, while the same amount in a high-yield account could earn $100 or more. This simple comparison highlights why many people are making the switch. High-yield savings accounts are mostly offered by online banks, credit unions, and some fintech companies. These institutions can provide better rates because they don't have the expenses of maintaining physical branches. Some well-known names include Ally, Marcus by Goldman Sachs, and Discover. When choosing a provider, it's important to check their reputation, customer service, and digital tools. Most accounts can be opened online in just a few minutes, making it easy to get started from the comfort of your home. One of the biggest advantages of high-yield savings accounts is the safety they offer. Most are insured by the FDIC, for banks, or NCUA, for credit unions, up to $250,000 per depositor, per institution. This means your money is protected even if the bank fails. Always check that your chosen institution is properly insured before depositing large sums. This peace of mind is a major reason why high-yield savings accounts are considered a low-risk way to grow your savings. Opening a high-yield savings account is usually a straightforward process. Most online banks allow you to apply in just a few minutes. You'll need to provide basic personal information, such as your name, address, social security number, and a funding source. After approval, you can transfer money from your existing bank account. Many providers have low or no minimum deposit requirements, making it accessible for almost everyone. Once your account is open, you can manage it entirely online or through a mobile app. One thing to watch out for is the minimum balance requirement. Some high-yield savings accounts require you to keep a certain amount in the account to earn the highest interest rate or to avoid fees. Others have no minimums at all. Always read the fine print before opening an account. If you're just starting to save, look for an account with no minimum balance so you can begin earning interest right away, no matter how much you deposit. It's important to know that interest rates on high-yield savings accounts can change over time. These rates are variable, meaning they can go up or down depending on the broader economy and decisions made by the Federal Reserve. While rates are generally higher than traditional accounts, they're not guaranteed to stay the same. Always keep an eye on your account's APY and consider switching if you find a better rate elsewhere. Compound interest is a powerful feature of high-yield savings accounts. It means you earn interest not just on your original deposit, but also on the interest that accumulates over time. This creates a snowball effect, where your savings grow faster the longer you leave them untouched. Even small deposits can add up significantly over several years, thanks to the magic of compounding. Let's look at a simple example to see how this works in practice. High-yield savings accounts are designed for easy access and management. Most are online only, which means you can check your balance, transfer funds, and monitor your interest earnings from your computer or smartphone. Many banks also offer mobile apps with user-friendly interfaces, making it simple to stay on top of your savings wherever you are. This convenience is a big plus for busy people who want to manage their money efficiently. While high-yield savings accounts offer great returns, they do come with some restrictions. Federal regulations often limit you to 6 withdrawals or transfers per month from a savings account. Exceeding this limit may result in fees or even account closure. These rules are designed to encourage saving rather than frequent spending. If you need frequent access to your money, consider keeping some funds in a checking account for everyday expenses. Not all high-yield savings accounts are fee-free. Some may charge monthly maintenance fees, excessive withdrawal fees, or fees for falling below a minimum balance. These charges can eat into your interest earnings, so it's important to read the account terms carefully. Look for accounts that are truly fee-free or have very low fees to maximize your returns. Remember, the goal is to grow your savings, not lose money to unnecessary charges. Most high-yield savings accounts allow you to link to your checking account or accounts at other banks. This makes it easy to transfer money in and out as needed. Transfers usually take 1 to 3 business days. Linking accounts can also help you automate your savings by setting up recurring transfers, ensuring you consistently add to your savings without having to think about it. One of the best ways to build your savings is to automate the process. Many high-yield savings accounts let you set up automatic transfers from your checking account. By scheduling regular deposits, you can grow your savings effortlessly and avoid the temptation to spend. Automation is a powerful tool for reaching your financial goals, whether you're saving for an emergency fund, a vacation, or a big purchase. High-yield savings accounts are ideal for building an emergency fund. Because your money is safe, liquid, and earning higher interest, it's the perfect place to keep funds for unexpected expenses like car repairs or medical bills. Having an emergency fund gives you peace of mind and financial security, helping you avoid debt when life throws you a curveball. If you're saving for a short-term goal, like a vacation, wedding, or new gadget, a high-yield savings account is a smart choice. Your money stays safe and grows faster than in a regular account. Plus, you can easily track your progress and withdraw funds when you reach your goal. This makes high-yield accounts a flexible and effective tool for managing your short-term savings. While high-yield savings accounts are excellent for short-term savings and emergency funds, they're not designed for long-term investing. The interest rates, though higher than regular savings, are still much lower than what you might earn from stocks, bonds, or mutual funds over many years. If your goal is long-term growth, consider using a high-yield savings account as a safe foundation, but look to other investment vehicles for bigger returns. One potential drawback of high-yield savings accounts is inflation. If the rate of inflation is higher than your account's APY, your money could lose purchasing power over time. While high-yield accounts help minimize this risk compared to regular savings, they can't always keep up with rising prices. It's important to balance safety and growth by considering other investment options for long-term wealth building. When shopping for a high-yield savings account, always compare the APYs offered by different banks. Even a small difference in rates can add up over time, especially if you have a large balance. Use online comparison tools to find the best rates, and remember to check for any hidden fees or requirements that could affect your earnings. APY, or annual percentage yield, is a standardized way to compare interest rates across different accounts. It takes into account not just the interest rate, but also how often interest is compounded. This makes it easier to see which account will help your money grow the fastest. Let's break down how APY is calculated and why it matters. APY is calculated using a specific formula that takes into account the interest rate and the number of compounding periods per year. The formula is APY equals 1 plus R/N, N, 1, where R is the annual interest rate and N is the number of compounding periods. This formula ensures you can accurately compare accounts, even if they compound interest at different frequencies. Online banks typically offer higher APYs than traditional brick-and-mortar banks. This is because they save money by not operating physical branches and pass those savings on to customers in the form of better rates. If you're comfortable managing your money online, you can take advantage of these higher yields and grow your savings faster. Most high-yield savings accounts come with robust mobile banking features. You can deposit checks, transfer funds, set up alerts, and monitor your interest earnings all from your phone. These tools make it easier than ever to stay engaged with your savings and make smart financial decisions on the go. When choosing a high-yield savings account, don't overlook customer service. Online banks may not have physical branches, but many offer 24/7 support via phone, chat, or email. Check reviews and ratings to ensure you'll get help when you need it. Good customer service can make a big difference if you ever run into issues with your account. Security is a top priority for online banks offering high-yield savings accounts. Look for features like two-factor authentication, encryption, and account monitoring to keep your money safe. Always use strong passwords and avoid accessing your account on public Wi-Fi. Your privacy and financial security should never be compromised. If you find a better rate or a more suitable account, switching is usually easy. Open the new account, transfer your funds, and close the old one if you no longer need it. Be sure to update any automatic transfers or linked accounts to avoid disruptions. Switching can help you maximize your returns and take advantage of the best offers on the market. Some banks offer promotional rates or sign-up bonuses to attract new customers. These can be a great way to boost your savings, but always read the terms carefully. Promotional rates may only last for a few months before dropping to a lower APY. Make sure you understand how long the bonus lasts and what requirements you must meet to qualify. Interest earned from high-yield savings accounts is considered taxable income. Your bank will typically send you a 1099 INT form if you earn more than $10 in interest in a year. Be sure to report this income on your tax return. While the taxes are usually minimal, it's important to factor them into your overall savings strategy. High-yield savings accounts can be opened as individual or joint accounts. Joint accounts are useful for couples or family members who want to save together. Both account holders have equal access to the funds and can contribute or withdraw as needed. Just remember, the FDIC insurance limit applies per depositor, per institution, so plan accordingly if you have multiple accounts. Some banks offer high-yield savings accounts specifically for children or teens. These accounts can help young people learn about saving and earning interest from an early age. Parents can monitor activity and set up automatic transfers to encourage good financial habits. It's a great way to teach kids the value of saving and the benefits of compound interest. Businesses can also benefit from high-yield savings accounts. These accounts help companies earn more on their cash reserves while keeping funds accessible for payroll, taxes, or unexpected expenses. Business accounts may have different requirements and features, so it's important to compare options and choose one that fits your company's needs. If you travel or live abroad, check whether your high-yield savings account offers international access. Some online banks allow you to manage your account from anywhere, while others may have restrictions. Make sure you can access your funds and customer service when you need them, no matter where you are in the world. High-yield savings accounts are accessible to most people, regardless of income or financial background. With low minimums and easy online applications, almost anyone can start earning more on their savings. This democratization of financial tools helps more people build wealth and achieve their goals. While high-yield savings accounts offer many benefits, there are some downsides to consider. Interest rates can fluctuate, fees may apply, and your returns may not keep up with inflation. Additionally, online-only banks may lack in-person support. Weigh these factors carefully before deciding if a high-yield savings account is right for you. It's helpful to compare high-yield savings accounts to other savings tools, like certificates of deposit, CDs, or money market accounts. CDs often offer higher rates, but lock your money for a set period. Money market accounts may provide check-writing privileges, but can require higher minimum balances. High-yield savings accounts strike a balance between accessibility and returns. To get the most from your high-yield savings account, shop around for the best rates, avoid fees, and automate your savings. Regularly review your account to ensure you're still getting a competitive APY. Don't be afraid to switch banks if a better offer comes along. Small steps like these can make a big difference in your long-term savings. Setting clear savings goals can help you stay motivated and focused. Whether you're saving for an emergency fund, a big purchase, or a special event, use your high-yield savings account to track your progress. Many banks offer goal-setting tools and visual trackers to help you stay on target and celebrate your achievements. It's a good habit to review your high-yield savings account regularly. Check your interest earnings, monitor for any new fees, and make sure your APY is still competitive. Regular reviews help you catch any issues early and ensure your savings strategy stays on track. High-yield savings accounts are best used for emergency funds, short-term goals, and any cash you want to keep safe, but still earn some interest on. They're not ideal for everyday spending or long-term investing, but they fill an important role in a balanced financial plan. Anyone looking to earn more on their savings without taking on investment risk should consider a high-yield savings account. They're especially useful for people building an emergency fund, saving for a big purchase, or wanting a safe place for their cash. If you value safety, flexibility, and higher returns than a regular savings account, this could be a great fit. If you're looking for high returns and are comfortable with risk, a high-yield savings account may not be the best choice. Investors seeking long-term growth should consider stocks, bonds, or mutual funds. Also, if you need frequent access to your money for daily expenses, a checking account might be more suitable. To sum up, high-yield savings accounts offer higher interest rates, safety, and easy access to your money. However, they come with some limitations, like variable rates, potential fees, and the risk of not keeping up with inflation. Weigh the pros and cons based on your personal financial goals before making a decision. To get the most out of your high-yield savings account, stay informed about rates, avoid unnecessary fees, and automate your savings. Regularly review your account and don't hesitate to switch if you find a better offer. With a little attention, you can maximize your earnings and reach your financial goals faster. High-yield savings accounts are a valuable tool for anyone looking to grow their savings safely and efficiently. They offer better returns than traditional accounts, easy online management, and strong security features. While they're not perfect for every situation, they can play a key role in your overall financial strategy. Take the time to compare options, understand the terms, and make the choice that best fits your needs. Thanks for watching, and here to Smarter Saving.